And yeah, it's going to be good. I've got a lot of great information that I want to put out to let you know how you can save literally thousands of dollars when it comes to you being able to purchase a home and everything. So this is going to apply mostly to home buyers, but if you are also a seller, stay tuned as well because there's going to be some interesting stuff, particularly when we get into talking about some buy down options that may be interesting for you to also utilize in the negotiating and everything like that. So let me set this up really quick, make sure my phones are on, vibrate so I don't have any distractions or anything like that. And we'll get started. So, gonna jump right into it because these Tuesday mortgage tips are going to be brief. Again, keeping these at 30 minutes or less, and that is the goal. So, yeah, we're gonna go ahead and get started. So I will share my screen here. Let me go over to this next slide. All right, so seller contributions. This is the bulk of what we are discussing today. So when it comes to seller contributions, these are the 4 areas that sellers can contribute to helping you as a home buyer be able to purchase a home. They can help pay for closing costs. They can reduce the price of the home. That's what the price reduction is. They can, they have a home listed for $300,000. They can reduce it to, $295 or $280. They can do a permanent buy down. We'll talk a little bit about what that is, and a temporary buy down as well. So we'll get into those too. But these are the 4 areas that can be affected. If you are a veteran who is utilizing your VA loan benefits, there's also another option. Sellers can actually pay off debt for veterans. So that is a plus when it comes to veterans using their VA loan, is that sellers can pay off debt for veterans. But for the majority of people who are not veterans, these are the 4 areas that sellers can use to contribute to helping you as a home buyer be able to purchase a home. So moving on from there, closing costs. We won't spend long here because when it comes to closing costs don't have any effect on interest rate, loan amount, or your monthly payment. They don't affect any of those things in terms of helping you to be able to save money. It just basically allows you to be able to purchase the home. Now, obviously it's important because if you don't have the money to be able to cover closing costs, you're not going to be able to purchase the home. So if you don't have those funds to cover closing costs, by all means, use whatever contributions you can get from the seller to help cover those closing costs so that you can purchase the home. But understand that closing costs are not going to have any effect on your ability to be able to save money on a month-to-month basis. These next 3 are going to have an impact. So we'll get into price reduction. Let's say that you found a home that you want to purchase and that home is listed at $300,000 and your interest rate is going to be 7%. You've got a great hotshot real estate agent, and your real estate agent has done some negotiating for you and has allowed you to be able to get that price down to $290,000. So they got you $10,000 saved. Still got that same 7% interest rate, but they're saving you $10,000 on that purchase price. That $10,000 is going to save you about $82 on your monthly payment, which is not bad. Saving $82 a month, that's depending upon the type of car you could drive, that could be a full tank of gas. It could be a half tank of gas. It could be a couple tanks of gas if you're driving a moped or something. But in any case, that's what $10,000 is going to get you. Now, in principal and interest, it's saving you about $65. But with that lower purchase price, you're also going to have mortgage insurance, which is going to be a little bit less. And taxes might also be a little bit less because you have a lower purchase price. So when you add in the little bit of savings from the mortgage insurance and the taxes, that's how that $10,000 difference saves you about $82 a month on your monthly payment if you were to take the option for the price reduction. Now, if you do a permanent buy down, same $300,000 price with a 7% interest rate, but a permanent buy down, you've got that agent who says, hey, I've been able to negotiate $10,000 off the price, so we can get the home for $290,000. Now you go and talk to your loan officer, and your loan officer says, you know what, that's great if you are able to get that home for $290,000. However, if you want, I can take that $10,000 and we can buy your interest rate down from a 7% to a 6% interest rate. Now, I'll pause there and say that that doesn't mean that in every situation, $10,000 is going to be what it takes to get your interest rate down 1 percentage point. That's just for the purposes of this example. I checked rates earlier today for the individual I was looking for because it's going to vary depending upon your financial situation as well. But for the individual I was looking at, it was going to cost them $7,000 to buy their interest rate down 1 percentage point. For the purposes of this example, $10,000, your hotshot loan officer says, you know what? Pay full price for the house, but that $10,000 that the seller was already willing to give you in a reduction on the price, let's take that $10,000, pay full price for the house, but now take that $10,000 and let's buy your interest rate down to a 6%. So you do that, and now it's saving you $194 a month. So even though you're paying more for the house, you're actually saving more than double what you would have saved if you only took a $10,000 price reduction, because with the $10,000 price reduction, we were only looking at saving about $82 a month. But now that we're taking that $10,000 and buying down our interest rate 1%, we're looking at saving $194 per month now. And that's going to help us out a lot more in terms of our monthly payment and how much we're actually going to have to pay. So we move on to the temporary buy down, and same $300,000 house starting out at that 7% interest rate. And so your agent says, you know what, we were able to negotiate that $10,000 off. We can get it down. And you go and talk to your loan officer, and your loan officer says, you know what, that's great. But we're in a market right now where I honestly think that interest rates are going to drop next year. So I think it would be good for us to select an option that's going to benefit you this year, but also provide some benefit for you in the future as well. So your loan officer recommends that you do a temporary buy down. Loan officer says, you know what, pay full price for the house, but take that $10,000 that the seller is giving you and put that into a temporary buy down. So what does that look like? With a temporary 2-1 buy down, that means that for the first year of that mortgage payment, you're going to pay 2 percentage points less than what your interest rate is going to normally be. So 2% less than that 7%, we're looking at paying 5%. So for that first year of the mortgage, you're going to pay a 5% interest rate. Now for the second year of that mortgage, you're going to pay a 6% interest rate. And for the third year throughout the remainder of that mortgage, you would pay that 7% interest rate. So what does that look like in savings? So for that $300,000 home at a 5% interest rate versus what you would have paid for that first year if you had a 7% interest rate, you're going to save $379 a month for that first year, because you get that 5% interest rate by having the seller pay for that 2-1 buy down. The second year, you're going to be saving that $194 that we were saving previously with a permanent buy down. So you've got a lot of savings coming within those first 2 years because you decided to do that 2-1 buy down. So what does this look like if we were to add up all of these savings? Obviously, we looked at the closing costs. We don't have any savings at all when it comes to those closing costs, because those don't affect anything when it comes to your payment or your loan amount or your interest rate. But with that price reduction, we were saving $82 a month. Now, over the next 5 years, let's say you stay in that loan for 5 years, that comes out to $4,920 worth of savings over a 5-year period. So you're saving almost $5,000 by taking that price reduction, which is not bad, almost $1,000 a year essentially. So now you go to that permanent buy down where we were saving $194 a month. Now, how does that look over 5 years? Pretty big difference. We're at over $11,000 that you would have saved by taking that $10,000, and instead of taking it in a price reduction, you now put it towards a permanent buy down, and you're saving over $11,000, $11,640. So that is a huge difference from what a lot of individuals typically do, which is they negotiate for the purchase price to be lower and then they don't do anything else. Well, I'm showing you here what you can do with that money so that you can actually get savings upwards of $6,000, $7,000 more than what you would actually get if you just took the price reduction. But we still have the temporary buy down. So with that temporary buy down, like we said, for year one, we're going to be saving $379 a month. And year two, we're going to be saving $194 a month. So when we add those up over the first 5 years, really it's just going to be the first 2 years, because remember, with that temporary buy down from year three on throughout the rest of the mortgage, it's going to be at that standard 7% interest rate. But for those first 2 years, it comes out to us saving almost $7,000, $6,876, which is not bad. So one thing that you want to know about this temporary buy down is that there are some options that you have when it comes to you temporarily being able to buy down that mortgage. One of those options is that, well, first I'll explain how the temporary buy down is set up. So a temporary buy down means that all of the interest that you would have paid if you had a 7% interest rate has been prepaid by the seller for that first year at the 5% and the second year at the 6%. The seller's already prepaid that interest. It's sitting in an escrow account, and that's what's being used to pay the mortgage with that difference that you're saving every month. Now, with a temporary buy down, let's say that your loan officer was correct in his assessment or thoughts that, you know what, the interest rates are going to drop next year. And let's say those interest rates do drop next year. Well, next year, your rates, let's say the interest rates drop to 5%. Your rate is currently, for the first year was at a 5%, but at the next year, your rate went up to a 6% interest rate. But if next year rates drop down to 5 and you're like, well, I'm going to go to 6 and then I'm going to go to 7, what are my options? So with a temporary buy down, you can actually utilize the unused portion of that buy down to go towards you refinancing into permanently having a 5% interest rate, which actually would make that temporary buy down option play to your benefit and you being able to save even more money than what you would if you were to take the permanent buy down option. So for example, again, let's say you've got the year one, you've got a 5% interest rate. Year two comes, your interest rate's going up to that 6%. However, if interest rates during year two were to drop to 5 and you want to keep a 5% interest rate permanently, since you haven't used that year two completely yet, you can take whatever portion you haven't used of that temporary buy down and put that towards refinancing your home permanently into that 5% interest rate. So essentially, you not only had savings throughout the first year of that mortgage, but now the seller also helped finance or help pay for you to refinance your home to permanently have a lower interest rate. So how much would that be? It depends on how much you have remaining on that temporary buy down. So for example, if you use up the whole first year and you're saving that $379 a month, and then you get to the beginning of the second year and you want to refinance to permanently have a 5% interest rate, that 194 times the 12 months would give you a little over $2,300. And so that would be $2,300 that you could put towards refinancing your home. So that's less money that you would have to come out of pocket with in order to refinance your home into that permanent 5% interest rate, which would keep you saving that $379 a month rather than going up to the 194 and then not having any savings after that. So those are some ways that you can essentially be able to save a lot of money, thousands, over $10,000 in just monthly payments, just over the course of 5 years, with you knowing how to structure the deal. Again, if you don't have the money to be able to pay for closing costs, then you want to use the funds to pay for those closing costs. But if you do have the funds to be able to pay for closing costs, then the price reduction is not going to be the first option that I would recommend. I would recommend going to the permanent buy down and then looking at that temporary buy down option as well. However, down payment assistance, this is something that I'm going to get into next week. So you want to stay tuned next week because I'm going to be talking a little bit deeper into down payment assistance and how you can use down payment assistance to work to your advantage. But one thing that I will mention here is that when it comes to down payment assistance, depending upon the program that you use, you may not have these buy down options that we referenced earlier. I'll throw them back up on the screen really quick. So some of these buy down options with the permanent buy down and the temporary buy down, if you use down payment assistance, these options might not be available to you because I'll take Georgia Dream, for example. I live in Georgia, and the Georgia Dream is one of the more well-known down payment assistance programs. Georgia Dream sets the interest rate for that program. Therefore, you do not have an opportunity to buy your interest rate down when you're utilizing a program like Georgia Dream. You have to use the interest rate that Georgia Dream gives you. Now, they have some really good interest rates when it comes to Georgia Dream. So the current standard Georgia Dream interest rate right now is 5.875 as of this recording. So it's not bad considering it's well below what the market norm is, which the market norm is actually closer to around 7%. So they're more than 1% below what the norm is for the market right now. So they have some good interest rates, but you don't have an opportunity to buy those down. So if you do have to take the Georgia Dream route to get that down payment assistance money, you're going to want to look more at the closing cost or the price reduction in terms of where you want to put that money to be able to help you out. But there are some down payment assistance programs out there that will allow you to be able to buy your interest rate down to a lower level. And in those instances, that's where you want to focus on how can I best utilize the seller's money to be able to get my interest rate as low as possible. So what I recommend is talking with your loan officer, having them run some different scenarios for you and calculations to see how much is a temporary buy down going to cost and a permanent buy down. The last thing I'll say before we hop off of here is that if you are a seller, also if you're a buyer, listen up as well, because this is going to be a negotiating point for you, but it's also going to be a negotiating point for the seller. When it comes to that temporary buy down, a lot of sellers think of just doing a price reduction. They have a home and they say, you know what, home's not selling. It's been on the market for 30 days, 45 days, 60 days, whatever. I'm gonna reduce the price down $10,000. But if you look here, the savings, what it would have cost you to just do that temporary buy down would have only cost you about $7,000. So you actually could have saved $3,000 by offering buyers a temporary buy down as an incentive to purchase your property rather than just dropping the sale price $10,000. You could have saved $3,000 and it would have incentivized the buyer because the buyer is now going to be saving almost $380 a month that first year and almost $200 a month that second year. So that's as an incentive for the sellers to be able to say, you know what, I can actually save a little money and still incentivize buyers who are interested in purchasing this property. But as a buyer, this is also a negotiating point that you could have because maybe you go and talk to your lender and the seller doesn't want to go $10,000 off the purchase price of that home. So if they don't want to go $10,000 off the purchase price of the home, talk to your lender and say, hey, how much would it be to do a temporary 2-1 buy down? Because this has to be paid for by the seller. So your lender might come back and say, you know, we can do a 2-1 buy down. It's going to cost $6,000. It's going to cost $8,000, whatever it might cost. Now you go back to the seller and you say, okay, you don't want to negotiate $10,000 off of the purchase price of the home, but you do and are willing to perhaps negotiate $7,000 off the price. So how about you pay for a temporary buy down? You're going to save $3,000 because you're not going to come down $10,000, but maybe you can come down $7,000. Do this temporary buy down, and then you as a home buyer benefit because you're going to have these huge savings for the first 2 years of that mortgage. And if interest rates drop within the next year or year and a half, you can put whatever the remaining amount is that you have not used with that temporary buy down toward permanently refinancing that mortgage into a lower interest rate so that you stay with the lower interest rate and you never have to get to that higher interest rate that you would be headed to with the temporary buy down. So those are some options that you have for you that hopefully will benefit you and help you to better navigate the current real estate market that we're in right now, because it is a lot. Home prices are high, and I am going to be here every Tuesday at 7 p.m. same time for, like I said, about 15 to 30 minutes. It's definitely going to be under 30 minutes to just give you some information that'll help you navigate the real estate market, save as much money as possible. So again, make sure you stay tuned in for next week as I talk about down payment assistance and how you can use down payment assistance to your advantage, because there's a lot of things with down payment assistance that a lot of people really don't know. There's some extra costs that are involved in there, and I'm not going to give away too much because I want you to show up next week. But there are some things that I'm going to give you for how you can utilize down payment assistance to your advantage. And I'm going to talk a little bit about the different down payment assistance options that you have, regardless of who you use for down payment assistance, because these apply to all of the down payment assistance programs. They fall into one of these three categories that I'm going to be going through next week. So make sure you stay tuned for that. But thank you for taking the time to tune in. Take care, be blessed, and we'll see you next week.